Hi everyone, this is a technical analysis on gold. Let's start with a fundamental overview first. Gold has been on a steady decline since hitting a new all-time high on the 17th of July. We saw reversal in many other markets on that day, and although the catalyst has been unclear, it seems like it's all being connected to deleveraging from strengthening yen. Basically, the squeeze on the carry trades impacted all the other markets. Given the magnitude of the recent appreciation in the yen and the correlation with many other markets, it looks like this could be the reason indeed. On the macro side, the US data continues to point to a resilient economy with inflation falling slowly back to target. The market is fully pricing a rate cut in September and December, and some chances of a back to back cut in November. The risks for the economy increase the longer the Fed keeps policy restrictive, so in the big picture, it looks like gold has limited downside and lots of upside. On the other hand, we have Trump now looking more and more like a potential winner, and his policies are seen as inflationary, which could see the Fed eventually going even more slowly in rate cuts. This might not impact the market substantially in the short term, but it could decrease the buyer's conviction for a strong rally. Now, on the daily chart, we can see that gold eventually extended the losses into the 2,350 level after the fake out around the 2,430 resistance. We are now trading in the middle of this old range between the 2277 support and the 2430 resistance. So there's not much we can glean from this time frame, and we need to zoom in to see some more details. On the 4-hour chart, we can see that we have this downward trend line defining the current bearish momentum. The sellers will likely keep on leaning on the trend line to position for a drop into new lows with a better risk to reward setup. The buyers, on the other hand, will want to see the price breaking higher to regain some control and pile in for a rally into the 2430 resistance. On the 1-hour chart, we can see more clearly the recent price action and the rejections from the trend line. This will be a key spot for the buyers and the sellers, as a break above the trend line will likely increase the bullish momentum, while a stronger rejection should see the price dropping back to the 2350 support. These red lines define the average daily range for today. For the upcoming catalysts, today we have the US job openings and the US consumer confidence reports. Tomorrow we have the BOJ policy decision, the US employment cost index, and the FOMC policy decision. On Thursday, we get the latest US jobless claims figures and the US ISM manufacturing PMI. Finally, on Friday, we conclude the week with the US NFP report.